Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Maintaining valuation discipline. The most important thing today is maintaining discipline in one's investing. Maintaining discipline on the grounds of valuation is doubly difficult. The reason is that if you did not invest today based on today's valuation, a week later you look silly if the markets have moved further up. A lot of people have been conservative on the valuation front for over 6 months. But these 6 months not only tested the patience of these disciplined investors, it also made them look silly. The markets have a way of making even the most disciplined and process-oriented investors look silly. But that does not make them silly. They just look contextually silly because the markets took a different direction, at times belying sound investment logic and giving in to fear of missing out. So people simply dump money because they are afraid they would miss out on something. And when people dump money, the markets get bumped up. And in such a market where the markets get bumped up because of liquidity, the disciplined investor who is willing to wait ends up looking a bit silly. But as I just said, that does not make an investor silly. But the investor still needs to wait long before his stance gets validated. Often, by the time his stance gets validated, you could well have seen an entire cycle pass and opportunity missed. It is the fear of this missed opportunity that leads a lot of people to succumb to the FOMO factor and invest out of the fear of missing out. But discipline always comes back. And how does it come back? It comes back with a vengeance. So staying disciplined always does good to an investor, especially when the market froth is running at its highest. Discipline probably is running at its lowest. At that point, a disciplined investor will find it most difficult to sustain himself in the crowd, to stay around the herd, to keep his sanity intact. But there is no other way but to stick to his discipline, to stick to his principles, to stay out of a market which he is not comfortable with and wait for the market that will give him comfort. When that comfort comes, the investor walks out of his disciplined stage and comes out to invest and prepares himself to gradually play the market, to stay in the market and grow in the market. That's something that a lot of people have been waiting for, and hopefully those days return to the disciplined investor. Thank you for watching this video.